Hey everyone, welcome to another episode of Bitcoin Morning Brief with me, your host, Tone Vase. Sorry for the delay, but I think you guys will understand when you find out that once again, I got Jimmy back on the morning show. Say hi, Jimmy.
Hey guys, good to see you.
Awesome. So before we get on to it, I really hope everyone, if not watched, I know I've been doing a lot of podcasts lately, but you have to watch the one from last night, the On the Record with Morgan Raccoons, also known as Morgan Rockwell, also known as Montebello, who is being arraigned on Thursday on weird money laundering charges. I would love to be there to see it in person, but check out that interview. It's in my YouTube channel. It happened late last night. I was up till 2 a.m. doing that interview. I think I said 1 a.m. at the time. I don't even know what time it was. We started at 1 a.m. And we finished around 2 a.m. New York time. All right. I'll probably do a screen share of that, but before we go there, Jimmy, we got a couple of headlines. Let's just go over them real quick and take a look. Venezuela has launched their scam coin. It's a total centralized coin, which apparently is on Ethereum, though, of course, some people need to pump their NAM scam. So they're saying that it's compatible with NAM. Of course, there's going to be a pre-sale where all of the insiders of the petro will get to be rich. Any comment on this?
Well, I mean, this is I like that you pointed out this is centralized, like most ICOs. Like in many ways, every ICO is centralized, right? And this is one of them. They're hoping, I think, to cash in on the ICO craze, and I don't blame them for trying. Like, there are tons of other people that are getting rich off of ICOs. So Venezuela's thinking, we're poor, we could use some money. Why don't we make one? I will point out that the whole idea and like execution and the pre-sale and everything is just really, really confused. And like nobody really knows what the hell's going on. Not unlike a lot of ICOs. So, not a big surprise there. But this one's especially crazy because this is on at a state level, and you think businesses are disorganized, governments are like an order of magnitude more disorganized than businesses. So, I think we can expect sort of this sort of disaster one after another as more states sort of get into it. Kind of hope they succeed. I kind of hope they succeed. So, we can have more stuff to talk about and make fun of.
All right, so here's how I see it. Basically, the government of Venezuela is totally collapsing. And like all socialist politicians, it's becoming hard for the politicians and those connected to the government to, make money to rob the people, because when the people don't have anything else, you really can't rob them to make more money. And when you can no longer rob the people as a socialist / communist government and you have no more money, that's when your government is forced to collapse. So at this point, the government and those connected to the government have to find additional schemes to come up with more money to get perpetually rich with no consequences in order to rob the people. So, and of course, there are plenty of people in the Bitcoin space that are willing to assist a communist government to continue hurting its people and to help get rich off of the communist government. And this idea in the 21st century has become creating a scam coin, because then you also get to be rich by helping this communist government create the coin. You become rich off of the government as it continues to rob its people. In this particular case, basically in Venezuela, as far as the government's concerned, anything they can do to delay a complete, revolution by the people by a week is a good week. So this week or this month, I would say, it's the Petro ICO. So that's basically how it works. Anyone that is actually selling, that sold this idea to the Venezuelan government, and anyone that's helping the Venezuelan government build a centralized, controlled currency on top of Ethereum, which I think is technologically unstable. And I'm still, one day I'll get an expert willing to go on freaking camera to talk about it. And I think those people are just despicable, and they are as bad as the government of Venezuela. So anyone actually advising Venezuela on this is not someone that I would consider anywhere near a level of morality. Okay, so I am not a fan of this at all. I think this is going to end only worse for the Venezuelan people. And we'll see how it all ends. But I am extremely disappointed by this, and in the crypto community for helping the government of Venezuela, because I know they have advisors, just like in our next story, which we're about to get to. Any more comments on this, Jimmy?
Well, I mean, I don't, I wouldn't equate the morality of the Venezuelan government with ICO peddlers. The Venezuelan government's been pretty awful. They've like murdered people and stuff. So I don't know if that comparison is something I'd agree with.
From fine. I'll give you that one. From an economic perspective of basically robbing the poor people for you to become more perpetually rich.
Yeah, I mean, this is the bread and butter of any socialist government, is that they need to rob the people, or they run out of other people's money, and Venezuela's run out of other people's money, and the only thing they have left are their oil resources, and they're trying to peddle that away. Good luck with that, guys.
Well, so do ICOs, right? I mean, they either run out of other people's money, aka investor money, or no investor is going to give them money, so they're going ICO, right? I mean, like the concept is exactly the same. The only difference is that if you are at the top of the government, you also have guns.
Yeah, and they basically seized all of the oil reserves there. They've nationalized their oil reserves, and that's what they're kind of selling. I mean, I don't know how you trust a government that sort of nationalized all sorts of things to sort of keep your property rights. If you have like the rights to some oil there, like how can you be sure that the government will like let you keep it? I mean, they possess it. I mean, this is more or less the problem with centralized control, is that you have to trust the central authority, and Venezuela is not exactly that trustworthy, like from any standpoint, morally or economically, or in the markets or whatever. It's not a very trustworthy place. So I don't know. I don't know how. I can't imagine how this can possibly work.
Yeah, no, I agree. Can I just want to very quickly comment on a live audience question. Someone says, Tone, any thoughts on the yuan-based oil futures against the petrodollar? So just very quick, basically, in this case, a lot like I never really considered the petrodollar to be anything other than a phrase, petrodollar. As long as oil is priced in dollars globally, it doesn't really matter what currency you use to purchase oil. I never understood why, if let's say Russia was to buy, or let's say Europe, right, Germany was to buy oil from Iraq, why can't they just send Iraq the euros and Iraq would convert that to their local currency? Like, as long as the oil is priced in dollars, that's all that really matters. The global finance cannot force you to reroute your currency transaction through the dollar. It's grossly inefficient and totally unnecessary. And these are the conspiracy theories of I don't know, the gold bugs and all the other people. Now, if there is an actual contract priced in yuan for oil, then that contract needs to become the global leader in price discovery. And I don't think it will. So until the yuan-based oil contract has more liquidity than the US dollar oil contract, it doesn't really matter at all. Okay, so that's kind of my view on that situation. All right, let's move on to our next crypto story. And here it is. Actor Steven Seagal endorses a very questionable Bitcoin ICO, and notice the amazing spelling of the word Bitcoin. Now, the only person I know that would potentially spell Bitcoin that way is me, because I think I'm the most dyslexic and speller that I know. So other than that, assuming, since I clearly did not write this article, that has to be spelled the way it's meant to be spelled. What do you think about this? Because I know I have my thoughts already. It's called Bitcoin with two eyes, or three eyes.
Uh-huh.
and also refers to as the B2G token with a beautiful pyramid scheme right there in there.
Referral commissions, yeah.
Yeah.
Yeah, obviously Steven Seagal got tempted by some money, and he's selling some of his fame for money. And this is more or less what most ICOs do, is that you're selling part of your reputation or all of your reputation in exchange for money. And that's a decent short-term trade. It's almost always a terrible long-term trade, because what you're doing is damaging your brand forever and ever, because you will always have that with you, in exchange for some short-term lift in financial like situation or whatever. And the thing is, a lot of the types of people that do sort of sell their soul for an ICO, they're going to spend the money and be poor again soon enough. So in many ways, I think Steven Seagal, Floyd Mayweather, all of these people that have done these things, I think you've made a terrible trade. And you might get money now, but what's going to happen when your millions are spent on Lambos and whatever? Yeah, like long term, this is a terrible trade.
Yeah. Well, like, oh man, like I totally underestimated how bad this this ecosystem can get, right? I mean, basically, because everyone missed out on Bitcoin, everyone is trying to convince other people that they've created the better Bitcoin. I think Ethereum is the main cause of this. Like when the DAO did not destroy Ethereum with that DAO hack, and Ethereum, made a comeback. I mean, everything just turned so bad. So what's happening now is, I mean, everyone is on a hunt to convince a person with influence to sell their Ponzi scheme. Now, eventually, this is going to end. It's going to end badly. Like, some of these people are going to get away with it, but some of these people are going to be grossly embarrassed. Like, people wonder how, the 1929 crash, how did things get out of control? The dot-coms, how did they get out of control? The real estate, how did they get out of control? Like, everyone blames Wall Street for the real estate crisis. No, I don't blame Wall Street. Like, no one forced you to buy an overpriced house with a crazy mortgage, right? And this is what's going to happen here. Like, I'm really hoping that this bubble ends sooner than later, but if like every single person with influence continues to pitch a different scam, this can really get out of control. And this could really be like the equivalent of a tulip bubble, only instead of one asset, everyone makes up their own asset. And then some of those assets go to the top, even though they're all going to go to zero. My only hope is that Bitcoin survives this mess. And as long as we continue to have people like Gregory Maxwell and Luke Dash Jr. and Adam Back and Peter Willa and Peter Todd. I can name a lot more names, Alex Marcos, Blue Matt. As long as those guys, continue to stay focused, we could, I mean, Bitcoin might be okay. But like the worse this gets overall, the more I get nervous in general about the whole space.
Yeah, I wouldn't worry too much. The people that focus on the short term tend to flame out pretty fast, and I think that's what's going to happen here.
All right, quick final story, because I know everyone wants me to get to the price. So I wasn't really familiar with this. So like the ending of this kind of says it all. This is probably one of our this is probably the troll of the month. So go ahead, Jimmy. Why don't you clue us in?
All right, so Crypto All Stars, they were sort of like, I think, an ERC 731 token on Ethereum or something like that. But basically, you can buy a Crypto All Star, and then the next person has to pay more for it. It's very literally like, whoever is left holding the bag kind of game. And it was I like the fact that they were very transparent about it. Like, if no one's buying it from you, then you're kind of stuck with the All Star. Anyway, this apparently the two founders had a falling out or something, and this person bought the entire Crypto All Stars domain and everything else for, I guess it was like 30 Ethereum, and to quote unquote teach everyone a lesson. More or less, everybody that held like the Naval card, I think, was going for like 18 Ethereum or something like that. You know, they're just sort of left holding the bag and saying, okay, this is ridiculous. So they bought the domain, put it, redirected to this particular thread here. It's like 5 pages of random, stuff. But basically, it's this is how a lot of this stuff kind of ends. This one is particularly funny because it's it's based on like a troll or whatever, and yeah, I don't know. It's yeah, it's kind of crazy because it's yeah, there was a lot of money that people put into these all-star cards.
Well, all right, man. So that's it for the news. You got anything else you want to say, Jimmy, before I get to the price? And you're welcome to stick around, but it's up to you. I don't know how busy you are these days.
I'm quite busy. I just want to plug my programming blockchain seminar. I have the next one coming up in a little more than a week in Tampa, March 1st and 2nd. Then I have another one in Hong Kong, March 22nd and 23rd. And then I have one in Seoul, Korea. That's March 26th and 27th. If you please get in while you can because the prices go up as soon as certain deadlines are hit. Hong Kong, for example, the early bird discount ends tomorrow.
Awesome. Thanks, Jimmy. Good luck on those seminars, and I will probably be in New York. Well, actually, no, wait. I'll be in Russia the second half of March. I'll talk about that later on. But yeah, we'll try and coordinate. If I'm on a home base, I can try and stick with your schedule if you still want to come on live and discuss stuff.
Yeah,
all
we'd love to.
All right. Well, we'll say goodbye to Jimmy, and we'll take a look at the price.
Bye, guys. This song is done.
All right, guys. Yeah, I know some people want the price. The news is important, right? Speaking of which, where is the currency trade? Nope. What is that? My YouTube channel, right? So, hey, this is the video from last night. This is the on the record from last night. I thought it was very interesting. I really enjoyed doing that interview, and also, to be honest with you guys, I'm a little disappointed in the 13,000 views for the University of Maryland presentation. It's a very good presentation because the two videos before and after it have over 20,000 views. So this tells me that people care way more about my views on the price of Bitcoin than the general understanding of what Bitcoin is, which gives me the confidence as to why I am so bullish on Bitcoin. So I strongly recommend checking out the University of Maryland presentation that I did about the history of the price of Bitcoin. Like, I don't care about the numbers. Like, I mean, I don't care if this was 5,000. I mean, like, what bothers me is that the video right before and right after have significantly higher numbers. If this was in reverse, this had 13 and this had like 10 and 10, I would be way happier that people actually care more about the understanding of economics and Bitcoin than just random, price predictions. But anyway, let's move on. Let's talk about the price, okay? So while the current week started off really, really strong, we still needed to end that week, and the numbers remain very, very, well, not very bearish, but at least we're on a 7. So either way, this count is going to come to an end. I personally do not want to see a red 8. If we get a red 8, that means we are closing next week below 8,200. While that does not necessarily imply that we are going to go below 6,000. So if we could get a 9 and stay above the $7,000 range, and we can meet this 50-week moving average, we could be okay. Like, for example, this green line can still somewhat act as support, even though I said it before that if we get back to 7,600, it's unlikely it's going to hold again. But it's possible I will change my mind if we get to 7,600, let's say 3 weeks from now. That means that enough time has gone by. All right. So the thing is, on double bottoms, when it comes to double bottoms, things are a little bit different. in the case of double bottoms, you could have a double bottom if the time between your double bottom is significantly large for the asset at hand. Um, and it doesn't work the same. It doesn't work the same for a double top. Like if you get to a double top after a significantly long amount of time, it's an amazing bullish opportunity. Like when the Nasdaq finally made it back to the 2000 high 15 years later, it just like shot up like a rocket right after that. Okay. Now, if you go to a double bottom like 15 years later, that's also a bullish sign. So, I mean, double bottoms are a little bit different than double tops in my experience. So, anyway, the candle here is already starting to look the opposite of this candle, though the 3 weeks ago, though the wick from the top isn't as big. So again, today's only Wednesday, so we still got a long way to go. We have to zoom into the daily chart to see more, but as far as the weekly chart is concerned, traditional trading would have had you be bullish last week as of 9,000, and you're still in the money on that trade. But if you go back below 10,000, you have to consider if you did take on this trade based on the weekly long-term scale and you got in long at 9,000 as a trader, you have to consider taking that profit if you go back below 10,000. It's still a good trade. It's still a profitable trade. But if we go back below 10,000, you don't want to risk going below 9,000. You can always buy back in as a trader. All right, let's go to the daily chart. Now, this is a really bad day, and it doesn't give you a chance for that daily close. Remember, this time indicator um, works on the close candle. Now, there are instances where you could jump on a trade using this indicator, but the only without waiting for the candle close, but that has to come from a 9. So basically, if this 7 candle was a 9 candle or an 8 candle, if it was just like if this happened one day later, then you could have definitely used this indicator to take on the bearish trade. Now, because it happened one day sooner, you actually cannot use this indicator to enter the bearish trade. Like if I was to automate trading off of this indicator, this would not tell me to go short. However, traditional trading based on support, resistance, and the shape of your candle certainly told you to potentially go short right here. The moment current candle started trading below the previous candle. This is a clear reversal candle known as a Dragonstone Doji, or you can also call it a shooting star, I guess you could. And we blew past 3 resistance points, and look, we were never able to close above any of them. Like you can even see this dotted line known as the setup trend line. And if we would have closed a smidge higher above this dotted line, the dotted line would disappear. But instead, the dotted line continues. So while your trade looked good on daily levels yesterday afternoon, the close is what matters. And when it started to turn and close below the triple resistance cluster of setup trend, Fibonacci, and the 50-day moving average, everything turned, I guess, late last night, and we started to go back down. Now, again, we still have about 7 hours left in this candle, and anything can happen. So, can this candle close $1,000 lower? Yes. Can it go all the way up and close near the opening of the candle? Absolutely, right? So at this point, the daily chart, all the daily chart is telling us is that based on traditional trading, there was certainly a potential for a short trade as of the moment we broke below 11,100. Well, what was the low of yesterday's candle? It was exactly 11,100, right? So as of 11,090 bucks, there was a short trade based on traditional trading, and this is why I recommend people to go to my website and read the Learn Trading section. I don't have any videos yet. That's coming in the future. I'll probably charge a little bit for the videos, not a crazy amount, but all the readings are here. You have to understand candlesticks. You have to understand what a reversal candlestick is and what they look like. All right. Wow, the chat is scrolling insanely fast. I don't know what's going on. I do have over 2,000 viewers, so that could be why. All right, let's move on with the price. Let's go. Let's zoom in. Let's see if there were any hints on lower level time frames. And I talked about it late last night. I'm once again doing 2-a-days. First, let's zoom out. Right. Let's take a look at the RSI and the MACD on the 4-hour chart. You know what? Let's also take a look at the RSI and the MACD on the daily chart. Right. So, okay, so we never made it to this potential trend line, even though I hate drawing trend lines off of 2 points. We never made it back to this trend line. I mean, I can just extend this line. I can just picture it. So that trend line hit would have been in the vicinity of 13,000. We didn't quite make it. This is a classic rejection. And I talked about this resistance cluster. I mean, if you zoom out and I drop, you know, some clutter on my chart, though that didn't help all that much. If you zoom out, you can see a classic rejection off the 50-day moving average. Let me make sure what the green line is. That's the 200-day moving average. So the 200-day moving average somewhat supported the price. It just got rejected by the 50-day moving average. So you do need at least 1 or 2 more days. I mean, one bad day does not set a trend for new all-time lows, but the caution flag is thrown back in there. Okay. Notice the RSI is starting to turn, and it's starting to turn early, which is confirming there's no divergence here. We are confirming potential trouble on the horizon. You have this huge oversold condition, overbought condition on the RSI. And notice how when the all-time high was made, the RSI was actually lower, giving you a little bit of divergence. Okay. Now the MACD top did not give you any divergence. The MACD is straight up top. The RSI was really going down. So your MACD is still starting to go up. Your MACD is grossly lagging in comparison to the RSI. So let's see what happens with the MACD in the near future. If the RSI has turned, it's turning way before the overbought condition. And if we go down fairly quickly, the RSI can easily make a more oversold condition. So just a quick note, like here, I mean, RSI did go oversold. You can't really see that. It's kind of light. Let me zoom in here. Yeah, this is, let's make it darker. Okay, so there it is, right? So your RSI did go oversold, helping you with the bounce. Your MACD turned, but late, and now things are starting to reverse. But you need at least one more candle. You need just at least one more candle. You can't make conclusions until this candle closes and you get a lower low. Now, I fully understand the trader dilemma, right? Like the trader dilemma. How do you wait for a candle close if the candle can close all the way down at 9,000? But hey, that's trading, right? This is why trading is so difficult. You cannot assume that we have fully reversed from this. I mean, you could have anticipated this resistance cluster as far as taking the profits from a bullish trade. You could have potentially taken on a small stab at a bearish trade, but you cannot project a full-blown downtrend and consider this cluster as it's not a bull trap. Okay, so here's the difference, right? I mean, if someone is telling you this is a bull trap, they are like, don't ever listen to their trading advice ever again, right? The bull trap is this. Okay, here's the difference. When we came up to this point, there was no resistance anywhere in this area. The only thing you could have said is that is the high prior to the all-time high, but this is not a strong enough resistance point. When you're sitting at 18,000, 17,500 in January, creating that bull trap, there is no resistance in this vicinity. Maybe minor, if you consider, the previous cluster. But I didn't even do that, right? But now this move up from the low point, this is not a bull trap because there was plenty of indication that this cluster at 11,300 was going to be formidable resistance because of triple resistance. So if we turn right here, this is perfectly normal based on technical analysis and the difficulty of crossing the resistance cluster. Okay. I guess that's my stop loss line. So this is from yesterday's video where I said there is a short trade on the table based on traditional trading, and that's your stop loss. If you took on a perfect short trade at 11,090 and you're still on the short trade, you have to set a break-even stop. If you are short as of 11,090 and you end up losing money on this trade, please don't ever trade again the rest of your life. And don't ever advise anyone on trading the rest of your life, okay? I would be setting a stop loss at least somewhere in the middle of this candle, and we can go to the 4-hour chart for more on that, okay? So the daily chart technically gave you a short trade at 11,090. Let's take a look on the 4-hour chart where that was, okay? Oh, wait. At the 4-hour chart, again, the RSI, look, the RSI is showing you divergence. On the 4-hour chart, I guess I didn't notice it yesterday. I probably should have. Wasn't really paying attention. Just been doing too many videos, right? But hopefully, other smart traders noticed the divergence not only in the RSI. I mean, look, hindsight's 2020, right? Maybe I should have pointed it out last night's video, but I'm doing so many videos that can't always keep track of everything. Now, hindsight, of course, you have this obvious divergence. RSI and MACD are going down while your price is going up. I talked about this a lot in my trading seminars. There you go. All right. And there you go. There's your divergence going on. Okay. Now, let's zoom in, right? So according to the daily chart, the short trade should have taken place at 11,090. Now, where's 11,090? Perfect. That's where this blue line is. So I had said that if you went bullish at the very, very top, and yes, it was a bad trade, this right here, this would have been your initial stop loss, and if you got nervous, you could have got out at any time. But this is also your short trade, right? So we flip the color on this line to the red line, and that becomes your short trade because that's when the red 2 starts trading below the red 1. And in addition, this is also perfectly in line with your traditional trading analysis on the daily chart. Now, if this short trade was taken on, your initial stop loss, which I'm going to move these lines over, actually, I can leave that one. I'm going to grab, this green line is now annoying. I'm going to grab this blue line as a stop loss, right? If you took on the short trade, your initial stop loss has to be fairly high. You want to give this trade a minute to develop. But now that the 5 candle and the 6 candle are falling, again, this is another trade that cannot possibly cost you money. Where would I set the stop loss right now? Well, this candle with a 5 on top of it, this last 4-hour candle, before the current candle, is something known as the expanded range candle. A candle that has a longer body than the average. So you would set your stop loss just above the middle of that candle. So this is where I would be setting my stop loss on this short trade. Of course, disclaimer, you don't ever short Bitcoin, but hey, if you're going to do it, you got to at least do it right, okay? So now you have this set of trend line that is trying to hold up the price on the 4 hours, this green dotted line. If we close below that line, that's bad. Now, also, this is now becoming a double support cluster. I don't really have a Fibonacci set here. Do I want to put a Fibonacci set? I think I want to put a Fibonacci set here. So basically, let's throw the Fibonacci retracements on. I'm trying to talk fast because I know this video is going to be freaking long as hell. So if I pick the low and we are assuming that the high is totally in, I'm not sure where the high is. I'll adjust it in a second. So there it is. and I did pick the high. Perfect. Now, my Fibonacci set only shows you the middle three at 38, 5, and 62, but there is a lesser popular Fibonacci line at here at 23%. And as luck would have it, boom, you have another triple cluster right now. This is not a Fibonacci line that I'm a huge fan of, but it is there in your thing. Like, I had no idea. I had a feeling it was going to show up right there, right? So again, this is a triple support cluster. And with the next candle, your 50 period moving average is going to be a lot closer into this cluster. The next candle is coming in 3 hours. So let's see what happens, right? So this is a triple support cluster of just like we have a triple resistance cluster. And keep in mind, the daily chart will always trump the 4-hour chart. Therefore, this support cluster right here at 10,400 is not as strong as the downward momentum from the daily chart. The weekly chart remains a bit, neutral. So the support cluster can hold up, but unless the support cluster bounces this thing violently to the upside, the support cluster is not going to hold. This also goes to my last couple of videos where I said I hate going long on a trade where the golden cross happens far lower than the price. If the price had pulled into the cross, I would have been way more comfortable with with the bullishness of the 4-hour chart, but I wasn't. And I had one of my nines up here, okay, giving you a nice little warning. So again, there's still 3 more candles to get you to a 9. Now, in a perfect world, we would be getting a 9 tomorrow, along with a triple support cluster, which would make it a quadruple potential reversal with a 9 Fibonacci setup trend and the 50 period moving average on the 4-hour. But we don't have that. So the time series analysis is telling me that there's potential 3 more candles of downside, which will take us into tomorrow morning. Okay, which will take us into midnight tonight, and I'll try and bring you a video late tonight. But anyway, that's the 4-hour chart. I also talked about the 12-hour chart because someone pointed out that there was a perfect 9 sell on the 12-hour chart. If you look at the 12-hour chart, you can see that the MACD is starting to cross. Again, you had this 9, so you could have jumped onto the short trade prematurely, but now you have a 1, and then this 12-hour candle is going to end about 6 hours. And if you get the next 12-hour candle trading lower than the low of the current candle over the following 12 hours, there could be, another indication to potentially go short on the 12-hour chart, okay? But I haven't been looking at that one much, so we'll leave it. All right, final chart is the 1-hour chart. Now, again, the 1-hour chart is looking very, very promising right now. I'll talk about the history in a minute, but let's talk about the current situation. You have 2 hours to go before you get a potential 9. So we are now working on an 8 of 9 candle, and you can see right here you have the 200-hour moving average is creeping up. So next candle is a potential 9 on the 1 hour with a double support, right? So here's what I would love to see next hour. So between 1 p.m. and 2 p.m. Eastern time, I would love to see a reversal candle. Is there a bad sound? I'm on the Yeti mic. What's wrong with my sound? Audio's bad. I don't know what's up. Let me change that. I mean, I'm on a good mic. If it's a robot voice, that's YouTube, guys. Sorry, there's like there's nothing I can do about that. I'm on a good microphone. I can switch microphones. Is this better? Is this better? I mean, there's nothing I can do, right? I mean, I was on the Yeti mic. Blame YouTube. Don't blame me. Yeah, so this is better. Sorry, guys. It's a good video. Let me switch back to the Yeti. I mean, I don't know what's going on. I was on the Yeti. I'm back on the Yeti. Is this back to being robot voice, or is this okay now? Still good or back to robot voice? Much better, right? I mean, hey, I didn't do anything. I was on the Yeti mic. Audio went bad. Sorry, I'm not gonna redo this whole thing. I mean, I don't have that kind of free time. Um, yeah, I guess it went bad for a while. Oh well, sorry guys. All right. Anyway, let's get back to this. I'm not gonna repeat myself. I mean, these videos are long enough as they are. Yeah, go complain to YouTube. I mean, I didn't do anything. I had my Yeti out from the beginning. I switched microphones to a speaker, and then I just switched back to the Yeti, and now we're back online. All right. Um, back online here. Okay, so here's the 1 hour chart. We're on an 8, and we have the 200-hour moving average coming up. So what is my perfect scenario between 1 p.m. Eastern and 2 p.m. Eastern time? Well, I want to see a 9 candle. I want this 9 candle to be a reversal candle in line with the 200-hour moving average to potentially set me up for a tradable bounce back to the upside, right? Now, if we reverse in the next 2 hours, okay, where can we realistically expect it to bounce back to? Well, I have 2 points. I'm gonna make these yellow. I have if we bounce in the next 2 hours, I have 2 points for potential resistance to the upside. So if we get a 1 to 4 candle reversal on the hourly chart off the 9, and keep in mind, if you are going to trade the 9 off the hourly chart, you are going to go against the 4 hour chart, which is telling you there's going to be at least what are you like 16 more hours, not 16, sorry, 14 more hours of downside. But hey, the 8 or the 7 candle could dip you that low, right? So if you are going to try and time the 1 hour reversal, this could be your first point of resistance, the prior point of the breakdown. And again, this is the 1 hour double bottom, and this is what I mean, that this is how things actually fall. What happens is you fall, you bounce, you get rejected by the 50-hour moving average, you get back to your point of prior low, and then boom, the bottom just dumps from under you, right? Now you have to realize this is a trader, that this point here is a beautiful shorting opportunity for any asset, because this is how things break down. Now, if we go past this yellow line on the upside, which is not going to be easy, how far can we go? Well, you can go as high as the 50-hour moving average. And then get rejected by it the second time, but it has to be on a lower low. So this 50-hour moving average would be somewhat lower than 11,150 to give you, a lower low and a lower high. But let's see if we can bounce right here in the next hour, at least short term, and give us some temporary relief. Oh, the yields. Oh, the yield is still moving. All right, so we haven't price flipped on the yield yet. However, we could have, right? So let's look at the S&P 500. What is this? This is the T-bills. Yeah, I was hoping to see a 9 here on the T-bill price to bump us to the upside. Same thing here. And let me look at the S&P 500. I was expecting today to be a down day in the S&P 500, but it looks like we're going up for now. This 50-day moving average is formidable resistance. So I would say there is a 9 coming. You have like 4 more days. But if we hang around, I mean, I expected us to dump hard sometime this week. But if we hang around this area for the rest of the week, I will be once again bullish to new all-time highs and beyond for the S&P 500 next week. Okay. Sorry about the audio earlier, guys. I mean, again, like I said, not my fault. Blame YouTube. I should have paid more attention to the comments, but I was like in the zone of talking about the price of Bitcoin. And my phone is always on silent, right? So calling me is just a waste of time. I see multiple people attempted. Like I can't have my phone. Like if I have the sound down on my phone, all you're gonna hear is buzzing and alarm bells throughout my entire podcast. Like it's literally impossible. So nothing I could have done. All right, let's do a quick Q&A. I know the video is already an hour, but hey, price is moving. All right, next. Okay, I already did that one. At what year in Bitcoin's life does the yearly chart become relevant or useful when applying it to the random number generator? Well, you need at least 5 years to get a number one because it checks it against 4 years earlier. Bitcoin had no price at all in 2009, so the first price we had was in 2010. So 2000, so you need 2010, 11, 12, and 13 as your base. 2014 was year number one. So that means you add 9 years to 2014. So until we get to 2022, it doesn't, like, I'd say 2021, right? So we got a good 3 more years before we have to pay attention to the random number generator on a yearly chart. All right, so 2021. All right, next. Is the mempool being 200 kilobytes good or bad? If Lightning and Segwit are working, how can we tell if anyone is even using Bitcoin? Well, I would say like 3 years from now, it would probably be good. But right now, I think it's kind of bad because it just, like, very few people are using Lightning right now. And this tells me that there's very little action going on Bitcoin, and the other altcoins are even worse. Now, 3 years from now, when somebody like, hopefully when someone like Amazon or Netflix adds a Lightning channel, they can then, they're public companies, right? So they have to provide stats on users, and maybe they'll provide stats on how many of those users are using Bitcoin through their Lightning node, right? So we're going to have stats. The reason we're going to have stats is because big corporations aren't as scammy as these ICOs, and they will report their numbers accurately because they have investors to be accounted to, and they're publicly traded companies. So when you have publicly traded companies using their Lightning nodes for Bitcoin transactions for their users, assuming it's not illegal to use Bitcoin in that jurisdiction, you basically you'll have some good stats. Sorry guys, man, I know people are asking me to repeat like the entire thing. Well, like, no one is going to rewatch this thing. Like, when they get to the bad voice, like, I can't even sum it up. Like, I don't do short summaries. I think you guys have noticed that. I mean, I'll do another one tonight. Maybe I'll repeat myself. I just don't want to repeat myself right now, guys. I'm sorry. I don't know. I don't know. I'll let Mike decide. Mike's doing questions for me. Mike, do I need to repeat everything, or should I do a new video now? Like, I actually have a consulting call to do, so I don't know. I'll think about it as I answer more questions. Tone, Bitcoin network is running great. Any idea when the market wakes up, dumps B trash and other unnecessary projects? I honestly don't know. I honestly don't know. I mean, I don't know. I don't. It's frustrating to me how, like, out of touch with reality most people are that believe in that garbage. Right, next. Tone, yesterday's bonds were flashing a sign, and you mentioned today was important. Can you take a look? Well, I did, kinda. Here are the bonds. I mean, I really wanted this to be an 8, and I really wanted today to be a 9 to give me a perfect bounce. I also wanted a 9.13, but hey, it's not a perfect world. Here is the yield. The yield still has a chance to give us an 8 today, and yield still has a chance to give us an 8 and a 9 tomorrow. But anyway, bond yields are topping S&P 500, so the bond yield should go down. S&P 500 looks like it potentially bottomed. S&P 500 should go up, and I am bearish bonds for the next 5 years. I am bullish stock market for the next 5 years. Maybe not 5, but maybe into Trump's reelection. All right, next. Tone, I'm a beginner and thinking about going on Saturday. Is the seminar fit for beginners also? Yes, the seminar is definitely fit for beginners. You will have to, because Saturday is so soon, you will not have a lot of time to prep for my trading seminar. So you will have the video of the trading seminar after you're done with it. And as long as you're willing to study afterwards, it is not an advanced seminar. Those are coming probably in 2020. I'll be doing beginner seminars, but if you are a seasoned trader, you might get a lot out of it as well. The reason why I keep my seminars to 30 people and under is so that a 10-year veteran of trading can show up, and a person that never traded a day in their life can show up, and both of those people walk away happy. I haven't had a single complaint yet about my seminars, and I would like to keep it that way. All right, next. I heard you mention the 128-day moving average. Is this only useful for crypto? Where and who discovered its relevance? Somebody in one of my followers mentioned it to me. I believe Willy Woo made it popular in crypto. Willy Woo is one of the is on a short list of people I actually respect in the world of analytics and trading and crypto. I've never actually talked to him. Maybe I should get him on a podcast. It could be another Ven Zen situation. Him and I never really had much contact. I've seen some of his research. I find it to be very good. I heard rumors that he's the one that made the 128-day moving average popular on crypto. I've seen it sparingly used in traditional markets. But I guess check out Willy Woo's work. Like I said, I don't recommend many people in crypto, but Willy Woo is one of those people that I feel comfortable with other people following. Okay, so there you go. Next. Tone, please briefly explain the difference between an aggressive 13 and a traditional 13. Sure. Now, there's always information on my website. Like, again, if you go to Learn Trading and you go to section 6, all of these links, like this one, sequential math rules, and this one, practical techniques, they explain this very well. Also, the Bloomberg Market Essentials, which is probably my favorite link in this section, they all explain it for a brief explanation. The difference between a regular number and an aggressive number. Now, the green numbers here, that's the countdown. In order to get a number 7, right, the close of the candle that the number 7 of a countdown is under, the close has to be higher than 2 candles earlier. For an aggressive 30, for an aggressive number, you just need the high of the current candle to be higher than 2 candles earlier. So you can see how the aggressive 13 should pretty much always come ahead of the sequential 13. Okay. Now, the only caveat is there's very spare documentation whether the aggressive 13 has to be perfected. And in order to be perfected, there is this weird criteria. So I believe we have the perfected 13 coded in, which may delay the 13. I have the latest code. I'm going to release it next week. I'm going to play around with it. Now, when I release the code for the clients, you'll actually have a toggle where you can choose, do you want the aggressive perfected 13 or just the aggressive 13? I don't know which one is better. You want to, flop both of them on and see which one is more relevant. Okay. You want to flop them one at a time and check them out. Okay. But that's the basic difference. Okay. One compares close to prior high. One compares high to prior high. So that's why it's called the aggressive. All right. Next. Look at the BTC USD chart through Coinbase on the hour. We're at a 5 versus what you're looking at through Bitfinex, which is on a 9. Which chart to use? Okay, well, I would use the Bitfinex chart, right? If Coinbase is on a 5, that means there had to be a one-off candle somewhere in the middle, and I don't like one-off candles, right? So I don't even have to go to the Coinbase chart. This is why if I see a one-off on a single exchange, or a one-off anywhere, I consider it to be more of a trend, and the trend is 9 candles deep, and it's time for a rebound. Like, look at here, like the trend was 9 candles deep. This candle, the 1 a.m. candle, I probably should have taken a look at the price after my interview with Morgan, and I would have said, hey, it's 1 a.m., and this candle started out as a 9 candle. The only reason this flipped to a 1 is at the very last minute of the 1 a.m. candle, it flipped to a 1. This was a 9 candle for 90% of this hour. And it's possible that I have enough like clients now that are using this indicator and trading with it to push this candle from a 9 to a green 1. So for all intents and purposes, the notification that I would do is I would have been notified that this candle is actually a 9 candle because it was a 9 candle for most of the hour. This sets me up for a 1 to 4 candle dead cat bounce right into the 50-hour moving average, setting us up for more downside. Okay. And same thing is about to happen now. All right. So keep an eye on that. All right. Next. Oh yeah, I wanted to mention one more thing. I got like a really interesting I got a very interesting notification right before I went live. I get so many notifications that what is this? Um I don't know what that is. Here, right? So I'm looking at this tweet, right? And someone says, hey, so I bought right off of this 9 and it turned into a horrible trade. And I'm like, okay, this looks interesting. And then I try to pull it up on my charts and I'm like, what am I looking at? And then I clicked on this chart and I noticed that it's a 5-minute candle. Come on, guys. Do you really expect to have the 5-minute trend to trump all your other trends? Uh, I mean, look, if you're going to use a 5-minute chart, you got to set your stop loss accordingly. If I had gone long right here off of this 9, where would I set my stop loss? Well, this is so easy. My stop loss is at 10,700, even if I don't look at any higher level time frames. And therefore, the moment it goes below 10,700, you lost $80 on the trade, and you say, hey, maybe it's time for me to go short. And then you could have made up for all of that in the next 5 minutes, right? So on a 5-minute chart basis, if you do choose to use this system for your trading on a 5-minute chart basis, you just have to be aware of the higher level time frames and what it all means. So like, I don't even know how far back this thing is. I'm assuming this was right here. Maybe I'm not even sure which 9 it is because it's a 5-minute chart. I mean, here's a 5-minute 9 and a reversal candle that would have been beautiful for a short-term trade on a 5-minute chart. And here's a 13. I mean, the aggressive 13 didn't do anything. The regular 13 gave you a little bounce. That's about it. If you decided to go long off of this 9, when do you realize you made a bad trade? Well, the moment you cross below the swing low. Once you cross below the swing low, you are now, this 9 is now the beginning of your downtrend, not the end of your downtrend. You can now trade the countdown all the way to the aggressive 13 or to the 13. So even if you go long on a 5-minute chart as of 9 a.m. this morning and you realize that's a bad trade, you can easily take the short based on a 5-minute chart somewhere in the vicinity of 9:05 a.m. At a price of 10,660, and you are short all the way into one of these 13s. So either into 10,480, or if you want to hold out for 3 more counts, you are getting out of this trade with a nice profit at 10,350. I mean, if you're going to use it on a 5-minute candle chart, but look, the lower time frame you use, the more time frames above that time frame you need to pay attention to. So you just make your life harder. Now, based on traditional trading, look how beautiful the 200 5-minute candle moving average rejected you at 8:15 this morning, Eastern time. All right. All right. Next question. Any opinion on Trump investing in China analysis is good or bad for Bitcoin? I don't know. Like, oh, Trump investing in chain analysis. Is Trump investing in chain analysis? I mean, generally, it's a waste of time. Fungibility is going to come to Bitcoin, so chain analysis is just wasting all of their time. Next. Married puts, bull call spreads, bear put spreads, protective collars. Do you have a favorite option strategy we can all do some research on? I am very familiar with all of those option strategies. I am also very familiar with an additional 10 option strategies. And the one I use to trade traditional markets does not have a name. Maybe I'll give it a name one day and publish it. So um, I was never a big fan of bear put spreads, so get that one out. Bull call spreads, yes, I've done those. Married puts, I've done those. Protective collars, not so much. But I would, do a. I used to like using protective puts on my long trades, and I also liked doing what do you call them? I like doing protective puts, and I liked doing, and you can use the money of a protective put to sell a call option. Well, actually, you're making more money. Sorry, you use the money from selling a call option uh, on your long position, and you can buy a protective put with it that's cheaper than the call option. So you're still making money from the call, you're protected from the downside, and you're profiting from the upside. So that was one of my favorite things to do in order to protect myself. Like if you're long Apple stock, let's say at $100 a share, you would sell $110 call option on Apple. So if Apple goes to $110, you are out of the stock and you made 10%. You use the proceeds from that call option to buy a protected put. So I guess that's kind of like a collar, but you would do it in a way that you're still profiting from your call option. So I guess I would call that a collar. And those were good. Those were good strategies. All right, next. Tone, are you familiar with the DeMark indicator? Obviously not. Come on, seriously? That's all I use. Apparently, this is another less popular TD indicator. No, that is the TD indicator, guys. As far as I know, I mean, there's lots of DeMark indicators. They're all trademarked, so I'm fringing on law breaking here. All right. What do I do? Do I go back over the thing because of the damn robot voice? Let's go back to the daily chart. So again, the daily chart. Sorry, that's not the daily chart. That's the 4-hour chart. The 4-hour chart is being supported by a triple support cluster of the lesser known 23% Fibonacci, the setup trend line, and the 50-period moving average. Okay. Now, the daily chart is still pretty damn bearish. Off of traditional trading, you need to close and make a lower low in order to consider taking on the short trade. You got clearly rejected by the triple resistance cluster of setup trend, Fibonacci, and the 50-day moving average. Now, this is not a bull trap. It is absolutely not a bull trap. You should have known that this point was going to be formidable resistance. I mentioned it multiple times. Unlike this point here in January, which was a bull trap because there was no resistance at 17,500. But here there was plenty of resistance. So if we turn all the way down and make new lows, this would be perfectly reasonable, in the future for not being able to get caught in this hype. Okay, unlike what happened on the bull trap. So be very, very cautious here. That's pretty much it. I mean, again, sorry about the audio earlier. I mean, YouTube. Let me not curse at YouTube. I don't want them to shut me down. All right. That's about it, guys. It's an hour and a half video. I'm not going to do any interviews today. I got plenty of work to do. I got to do some consulting, and I got to get. I do like to attempt a personal life here now that I'm back in New York, and I have a seminar to do on Saturday. So speaking of seminar, my consulting seminar in New York still has a couple of seats left. Not many. I'm going to be putting a sold out sign real soon. So if you're still considering it, you better hurry up. Email or Telegram. The directions are at the bottom. And if you like to support my work, please check out the affiliate section of my website. Pictures should come up on your end. TradingView, BitMEX discount, VPN discount, hardware wallets, watches. check it out. I mean, you can just use the sign up links. Doesn't cost you anything extra, and in some cases, you simply save money. All right, guys. On this note, I'm gonna turn on my camera for a minute, and hey, let's see if we can time this dip and take it from there. All right. That's all for me. I'll talk to you all on the next one. Later.